Hello and welcome to Tom Invests. In today's video, we're diving deep into one of the most intense economic battles of the 21st century, the trade war between the United States and China. This ongoing conflict is reshaping global trade, technology, and international power. But why is it happening? What are the long-term consequences? And how can we, as investors, navigate through it? Let's find out. To understand this economic war, we need to go back a few years, specifically to 2018, when the Trump administration imposed tariffs on Chinese imports as part of a broader strategy to rebalance trade and protect American jobs. Since then, tensions have only escalated, with China responding with its own tariffs and countermeasures. But why are the U.S. and China fighting over trade? The U.S., as the largest economy in the world, has long enjoyed a dominant role in global markets, with the U.S. dollar as the primary global reserve currency. On the other hand, China, with its rapid economic growth and technological advancements, aims to challenge U.S. dominance and position itself as the global leader in industries such as technology and manufacturing. The first battleground in this trade war has been tariffs. The U.S. imposed heavy tariffs on Chinese goods, impacting a wide range of industries, from electronics to consumer goods. These tariffs raise the prices of products imported from China, which ultimately affects American consumers and businesses. China, in response, retaliated with tariffs on American exports, hitting industries such as agriculture, machinery, and technology. These tariffs are not just about higher prices. They represent a shift in the global balance of power, with both sides trying to protect their economic interests and undermine each other's advantages. Now let's talk about technology, one of the most exciting and intense areas of this economic war. China has invested heavily in advanced technologies like artificial intelligence, AI, 5G, and robotics. Chinese companies like Huawei and Alibaba have emerged as fierce competitors to American giants like Apple, Google, and Microsoft. The U.S., naturally, has responded by imposing sanctions on Chinese tech companies like Huawei, accusing them of posing national security risks and espionage threats. The battle for dominance in 5G networks and AI could decide the future of the global economy. The winner will control the future of communication, data management, and global innovation. This economic rivalry extends beyond trade and technology. It also touches on military power and global influence. The U.S. has an unparalleled military presence around the world, and it uses this influence to maintain economic and political dominance. Meanwhile, China has been increasingly expanding its military presence, especially in the South China Sea, and pushing forward with initiatives like the Belt and Road Initiative to strengthen its global economic and political influence. The U.S. military remains a major force in shaping global security, but China's rising military power challenges this, making the economic war even more complex and multifaceted. So, how does this economic war affect the global economy, and what should investors do? First off, volatility is the name of the game. We are seeing shifting global trade flows, new alliances, and rising uncertainty. As investors, it's crucial to diversify our portfolios, stay informed, and look for opportunities in sectors like technology, renewable energy, and even defensive stocks that can weather the storm. While this economic war is full of risks, it also brings opportunities. By staying ahead of the curve, we can position ourselves to benefit from the shifting tides of global economics. It's about being smart and strategic in how we approach the market. So what do you think? How do you see the U.S.-China economic war impacting your investment strategies? Let us know in the comments below. Don't forget to subscribe and hit that bell icon for more videos on global finance, economics, and investment tips right here on Tom Invests. Thanks for watching, and I'll see you in the next video.